We are seeing more signs of life in the IPO market. Hyatt Hotels plans to raise more than $1 billion in an initial public offering. That'll be the 13th IPO that's happening so far. And Patricia Wu is here and joining us and giving us more explanation on this. What's going on?
Well, Mark, with hotel stocks rising and credit still tough to come by, Hyatt is turning to the stock market to raise some cash. It's part of a plan to shore up its finances and fund acquisitions. And the offering is on track to be the largest IPO in the U.S. this year. The hotel chain hopes to raise up to $1.15 billion. It will list under the symbol H on the New York Stock Exchange. Now, that's according to a regulatory filing with the SEC. Goldman Sachs, Deutsche Bank Securities, and J.P. Morgan Securities will manage the Hyatt IPO. The filing comes as the hotel industry posts declines in all three key performance measurements. According to data from Smith Travel Research, total RevPAR, which is revenue per available room, dropped for the week ending August 1st, 15.5% compared to the same time frame last year because occupancy was down 6.4% and the average daily rate dipped 9.6%.
What's this data say about the recovery for the hotel industry?
Well, last week's 15.5 year-over-year drop is less bad than the 16.3% we saw the previous week, so signs that things are less bad, that the decline is lessening. And when you look at RevPAR since September of 2008, you can see a leveling off, which might be signaling the worst is over. Well, investors certainly think so. For example, after getting crushed since last summer, Starwood, another giant hotel operator, its stock turned around earlier this year as investors' attitudes about the economy brightened. While there's no evidence of a turn in the hotel business, investors are betting on one, as they always do at the end of a recession. Now, a survey done by Smith Travel Research showed more than 50% of those polled believe that RevPAR will not recover until at least the second half of 2010 or after, which may be too late, as a third of the $8.6 billion in securities backed by hotel loans due in 2010 are at risk of defaulting. And that's according to Real Point in Pennsylvania, Mark.
Bloomberg's Patricia Wu joining us today. Patricia, thanks.